3, 2, 1, 0. Ignition. Liftoff.
My name is Nick.
And this is Yuri. You're watching Moontower HQ.
So for this week's topic, we're going to be covering the Bitcoin halving, as it has just recently passed. To start off, I think it's important to understand a little bit about what it is. So Yuri, can you do us a favor and tell the audience what the Bitcoin halving is from a fundamental perspective?
Sure. From the fundamental perspective, the Bitcoin halving has everything to do with the supply of Bitcoins that are in circulation. So if you know anything about Bitcoin, you know that the supply of Bitcoin is predetermined and hard capped at 21 million coins. Right now, there is just over 18 million Bitcoins in circulation, and the whole 21 million cap will be mined approximately by the year 2140. So what this means is that the Bitcoin supply is highly predictable. Why is it important? Well, if you look at the supply of, let's say, the United States dollar, this is a highly unpredictable event because essentially, and that's what we can see right now, what's happening in the United States with the Federal Reserve. The United States dollar can be printed pretty much into infinity simply by clicking a button on a computer. And the Fed chairman has admitted this many times, and it is a well-known fact. So the United States dollar is created pretty much out of thin air. They call it the modern monetary theory. You know, you print money to pay all the debts or to rebuy the stocks and things like that. And what it gives, the perception that it gives to average people is that there is no certainty in terms of how big the supply is and how big it will be in the future. This is where Satoshi Nakamoto decided to fix things a little bit, and he decided to create the exact opposite of that process with a Bitcoin supply cap. So, and the model behind that is that the supply cap of 21 million is produced at a predetermined rate. And it started with 50 Bitcoins every 10 minutes, roughly, in 2009. So every 4 years, this amount of Bitcoins that is being produced by miners is halved. So this is where the word halving comes from. The initial amount was 50 Bitcoins, then it was halved into 25 Bitcoins, and then 12 and a half, right? So right now, the supply of Bitcoin is roughly every 10 minutes is 6.25 Bitcoins, right? So this is essentially the guarantee that you know exactly how many Bitcoins will be issued in the future. And Nick, I'd like you also to take the ball in your hands and just kind of roll with the idea of the supply of money. And why do you think hard cap supply and a highly predictable supply could be a lot more beneficial than something unpredictable like a fiat currency akin to the US dollar, Canadian dollar, or the Russian ruble?
Thanks, Yuri. That's a very good question. I think fundamentally, as you described, Bitcoin in essence is a deflationary currency in the sense that it does have a certain cap that will ever be produced. Whereas opposed to fiat currencies, you have, well, infinite QE, as it's been called recently, which allows the unlimited supply of the actual dollar that's in circulation. This holds certain aspects for not only the economy, but also the people who hold this particular currency. From an economics perspective, of course, when you have an increasing money supply, technically what that is known as inflation. Inflation in its sense is actually not necessarily a bad concept in and of its own. However, hyperinflation definitely is. And we are treading between normal inflation and I would say starting to enter into the area of hyperinflation. When you talk about these levels of inflation or really economic growth, they could be done through one of two methods. One is, of course, creating more value in the economy through increasing jobs, through increasing technology and manufacturing, or it could be through just simply printing more currency. Of course, the former is much more advisable than the latter. And the reason being is because if you're printing your way out of a recession or some might say a depression, started in perhaps 2008, but we won't go there in the current topic, then what you're actually doing is just kicking the ball down the road, so to speak. And as a result of that, you're taking away the purchasing power of the individuals, companies, and the conglomerates that are utilizing this currency for commerce. So a lot of people will think that inflation in general, in terms of hyperinflation with regards to what's going on currently in the modern economy when it comes to printing of the dollar, is going to be very visible in the actual exchange rates of the US dollar for euro or something along those lines, the FX rates. However, this is actually a misnomer. Realistically, what's actually going to happen is inflation is going to creep. And that inflation will creep through the cost of goods, through the cost of services, as well as the cost of labor as well. And as a result of this, you're going to have a decreasing economic, if you will, standard that a lot of people are using. However, when you talk about Bitcoin, and this is why it makes a lot of sense on the flip side, as you kind of mentioned, Yuri, it's the exact opposite to what the current economic system is functioning as, and that's the deflationary currency. When you have something that holds its value, but not only that, actually appreciates in value over time due to scarcity, what you have is an increase of purchasing power. And that increase of purchasing power has certain types of incentives to save versus to spend. In an economic system, when the economy is doing poorly, people are incentivized to spend by an interest rate fluctuation, essentially, from the Fed. Whereas with Bitcoin, there's no such thing as an interest rate because, again, the supply is capped and everything is very much understood and known. So what you essentially are having is an ability for your assets to increase in value over time with regards to everything else in the world that's currently going on. But just because something increases in value, you must understand that it has to increase in value as opposed to something else. And this kind of gets us onto the next topic, which is the price of Bitcoin. So the price of Bitcoin can very well increase in the value of the US dollar. But that could be, again, for many different reasons, not necessarily because Bitcoin has become more valuable, so to speak. It actually could very well be because the US dollar is now becoming much weaker and being debased. So really what we try to understand as a whole about Bitcoin in general is that one Bitcoin will always be worth one Bitcoin. And that is really, I think, the goal that everyone should strive for in terms of understanding the inflationary versus deflationary model of Bitcoin versus normal currencies. However, when you do talk about price, it is a fun concept and conversation to have. So some people have certain predictions as to what can be in the future with regards to price. And that's kind of what causes a lot of the halving hype, if you will, because the miners that are actually active in this particular space, their supply gets cut in half. They get half the revenues, if you will, for their mining operations. So this has a certain economic paradigm that causes prices to usually go up. But really, and Yuri, I wanted to ask you this yourself, outside of the price, do you think there's any other kind of intrinsic motivation behind all of the attention that gets put on these halving events outside of just the fiscal value of the Bitcoin? So.
Well, yeah, I think it has to do with the predictability of its supply, because yes, it's really great that the Bitcoin price can go up, and if you look at the historic charts, you can see that pretty much after each halving before that, and we are now in the fourth epoch, so-called, there has been an increase in the value of Bitcoin in terms of the dollar, right? But I think for the majority of people, that's exactly what matters, because most people come to Bitcoin not really for the technology, but let's admit it, it's the basic human need, the greed of it. But to us Bitcoiners, it doesn't really matter as long as there's more people coming in and they use it and they switch to this new technology and help create the new Bitcoin economy, right? But at the end of the day, to people who are familiar with how the fiat currency system works, I think the halving is an important event, because it is becoming some sort of a tradition and celebration in our circles. I won't be surprised if next year's at the next halving will have a global parties, in many different places, live streamed. There were already parties this time, and quite a few events live streamed. So it's more of a way to show the fiat world that, hey, we have this new thing, it works, and there is nothing you can do about it because it is set in stone, it's programmed this way, and neither you nor me nor anybody else can do anything about it because it's a completely decentralized system, right? Nobody, not one party or person or company can change the rules of the Bitcoin network. And as a result, the rules of how this money is issued, right? So it's there, and we just have to deal with it. I think that's the message, and I think that's why it's very important. With time, the significance of the event, I think, will become a little more evident to people, and I think right now we're on the cusp of this, uh, rise in human consciousness, where they will understand that this new paradigm is coming, because Bitcoin has been here for over 10 years already. It's not going away. And if anything that proves that Bitcoin has any value, intrinsic value, is events like what's happening right now with the global shutdowns, with an economic collapse, so Bitcoin will prove its worth because of these things. It's not a good thing, we don't wish bad things to happen, but they happen no matter how we wish, right? And it just happens so that Bitcoin feeds off of such events, and that's why we celebrate the halving. It's just basically a significant event. It's a sign of Bitcoin's maturity, and becoming.
Now, if we were to kind of take a step back and kind of play perhaps the devil's advocate, one could say that the halving, outside of course the economic fundamentals of it, is more or less a marketing ploy, right? As you mentioned, it's a way to get attention within both not only the internal community, but also to the external audience as well, as to this is something that exists. Do you really feel that this is the only aspect of the halving that is important, or is there something else, something bigger that maybe hits a little bit more closer to home with regards to the ethos of Bitcoin that is then put forth with these types of halving events?
Well, the current joke that goes around is that you have quantitative easing in the fiat world, but the Bitcoin halving is now called quantitative hardening as opposed to the easing, right? So what we do, we actually harden the money supply of Bitcoin, and this is what we intend to do for the rest of Bitcoin's existence as programmed. So I think this is a good reflection of the ethos of Bitcoin, of the economics behind it, that is pretty much based on the Austrian school of economics, that dictates that money supply inflation is not really that good of a thing. It's better to let the free market decide what happens on the in the money market, rather than the government decide, or a single entity that has the power to print money with the press of a button, right? So this is just the stand against that, and we really think that the event itself just speaks for itself, because a lot of people are excited about it, including myself.
And I'm glad that you mentioned quantitative hardening, because I really think that really is what the halving is about. It's about communicating the economic message of the Bitcoin network and the Bitcoin protocol, and being able to compare it to what's currently going in the real world, as opposed to where it's going on in kind of what some may call the microcosm of the Bitcoin space, and seeing the very much juxtaposition of the economic principles between their thrust out into the open is really something that is, I think, one of the most relevant aspects of the Bitcoin halving itself, outside of the fundamental economics of it. When we talk about future halvings, and you mentioned that each halving is about 4 or so years apart, I believe specifically it has to do with the amount of blocks that are mined. Is that correct? Okay.
Yes, exactly, because every time new bitcoins are issued, they're issued when a new block is mined by miners, right? But in terms of our human time, it takes on average 10 minutes, but it can be 20, it can be 5 because of the variance in the mining difficulty. So the halving happens every 210,000 blocks, which is roughly 4 years.
That makes sense. And in your opinion, do you think that the current mining capacity as it stands, and this is a little bit of a tangent, but I think it's important to talk about as we move on to the future, into then the fourth epoch after this one, and in particular with regards to the costs of the miners themselves. Of course, because the reward gets halved, there are certain things that miners have to do in order to compensate for this. In your opinion, do you see the halving over time having a positive or a negative impact on the centralization of miners in the ecosystem?
Well, I think overall, long term, it will be decentralized. But the thing with mining is that as the supply of bitcoins cuts in half, their revenues get cut in half as well. So while larger conglomerates, mining conglomerates, and more of industrial miners are able to survive because they have enough cash in their coffers to cover different expenses, electricity being the largest expense. The little guy will most likely shut down the mining equipment until the price goes up, right? So it just makes sense for the little guy to shut down the equipment if the price becomes if the price does not cover his mining expense, electricity expenses, right? So, but overall, what we're seeing right now, and you can see news titles pretty much every week now, that larger corporations are getting into the mining game, but not just the private corporations. Right now, there's governments talking about getting into mining, and the governments of Ukraine and Belarus have been really discussing allowing and actually encouraging atomic power plants and other power plants to get into mining, because a lot of these facilities, especially now when electricity is not in that much demand, now that everything is on lockdown, right? They waste a lot of electricity. It's just there, and power plants and facilities like coal mining facilities and gas facilities, they waste a lot of this energy that could be potentially stored. And that's why a lot of people argue that Bitcoin is the container, the store of that energy, if only you put your energy to use by supporting Bitcoin in the form of mining it, right? When you mine Bitcoin, you make Bitcoin more secure. In exchange, Bitcoin pays you for that, right? In the form of Bitcoins, the coins themselves. So I think eventually the mining industry will become more specialized, more on industrial scale. But I don't think it means that the little guy will always have to shut down their mining, because what exists is the mining pools, right? You don't have to mine by yourself in your basement. What you do is you combine your hash power with the hash power of the other little guys, and you form a mining pool. So now your mining pool has a lot more chance to actually mine Bitcoin. And when you do that, that Bitcoin is split among all the participants proportionally to the mining power that they provide to the pool, right? So there's quite a bit of pools out there right now. There will be more, I'm sure. And some events from history actually show that as soon as mining power starts centralizing, people turn off their miners or they redirect them to other mining pools to make sure that things get rebalanced a little bit. And that's why I think this is a fascinating field. Mining and Bitcoin in general, it's more like a self-adjusting organism that responds to various stimuli out there, right? So I think long-term, mining will still be decentralized, it will be more specialized, and will be highly profitable as well.
And I like what you said with regards to Bitcoin's ability to actually store its value in the form of extra electrical capacity. There have been arguments that have been going around to say that Bitcoin is actually a waste of electricity in the sense that it's actually causing, increase in greenhouse gases and everything else from all of the production facilities that are required for this in terms of the power capacity. And this is something that I find personally a bit ludicrous, because to me, it's actually the exact opposite, very similar to what you were speaking to. It actually takes the excess capacity that we currently just do not have the technology to store in good batteries until, something comes along the lines. But as far as I can remember, battery technology hasn't changed in the last maybe 40, 50 years very, very much, outside of perhaps lithium ion, but that still does not provide enough storage capacity. Whereas here you have not a physical means of storing that electricity in a container to then be able to disperse it, but you have an economic store of value, as you said, a container. And I think this aspect of Bitcoin and mining in particular is going to be very, very critical for a lot of large organizations, like you mentioned, governments, city states, and things of that nature, as a means of providing that economic reserve valued in electricity, valued in Bitcoin as a result of mining. And I do believe that, as you were stating, decentralization is something that is concerning to a certain degree, because we have seen in the past history of Bitcoin, there have been times where certain mining pools got quite large, enough to possibly enact a 51% attack on the network. But they were, as mentioned, very quickly disbanded as a result of that, because the ultimate goal for any kind of mining pool or even any kind of miner is to ensure the throughput of transactions within the Bitcoin network, is not to destroy the security mechanism behind it by any sense, because you're essentially, undermining your own economic value, if you will, if you're doing that. So the incentivization mechanisms, I think, in proof of work mining is one of the things that is fascinating for me personally, and how it actually enacts on a greater scale when it comes to people from small miners to large organizations. And I think this is a good topic to perhaps wrap the conversation up and talk about mining as it starts to move into the next generation of organizations taking the front line, if you will, or the spotlight, with all of these big industrial projects that will be utilizing Bitcoin and Bitcoin mining as basically a, if you will, integral part of any kind of municipal buildings or any kind of infrastructure projects. In your opinion, what do you think are the easiest, lowest friction projects that the government can already start building Bitcoin mining into, that currently exist in the world today and that can possibly exist in the future?
Well, I think it's the lowest hanging fruit is the heavily mismanaged centralized power grid, because this is where governments lose money all the time, right? And but it's not about having no electricity. They have plenty of electricity, but for some reason this whole thing is highly mismanaged, right? So I think this is where they can really make some money by directing some of that energy into Bitcoin, and you can modify it in a way that it's dynamic. So you can see the peaks of energy consumption and the lows, and you can modify it the way that when there is a low but you still produce the same amount of energy, for example, you can redirect that into Bitcoin mining, right? So this Bitcoin mining initiative from these grid operators becomes adaptive to the supply and demand, right? Um, Initially, I think it will be the gas and oil producers themselves, but at the same time, governments will always see that, okay, gas and oil producers, they start making a lot more money because of it, or at the very least they stopped losing money. But in my opinion, they will start making money because not only thanks to Bitcoin, they're able to store the excess electricity capacity, but because Bitcoin itself, in the long run, goes up in value, they are able to multiply that if they store it long term, right? So governments will see that, municipalities will see that, and they will start doing exactly the same. This is my opinion on the lowest hanging fruits, right? There are other ways they can do that. They can provide all kinds of contracts and electricity contracts. There can be all kinds of, there's already private companies that are popping up that help miners essentially secure the cheapest energy contracts that they can find. So they are essentially becoming energy brokers, so to speak, right? And there's also new markets that are starting to appear, such as derivatives markets for the hash power of Bitcoin, right? So there's so many things that can happen there. And in my opinion, while the government is really slow at adopting new technologies, eventually they catch up. And obviously, if there is a tax potential, they will have to catch up, right? So that's inevitable.
That makes a lot of sense. And for me personally, I really like to pontificize about the future of what can be. And currently right now, as a result of what has happened in the world due to the coronavirus, COVID-19, is of course a decrease in global greenhouse emissions. Now, whether you want to talk about man-made climate change or the fact that it's a natural cyclical aspect of the earth itself, I think is less relevant. But what is important to understand is that clearly there is a push, if you will, by the governments of the world as a result of these drastic drops in CO2 numbers for green energy and green energy projects and infrastructure in general. So for me personally, I strongly feel that this market of derivatives, this new kind of sub-economic system that is being developed as a result of Bitcoin's ability to act as a store of value for excess electricity, will be very much tied into this new movement. I think that around the world, there is a spike in infrastructure projects that are focused primarily on solar. I believe there's a couple going on in the United States. China is also building quite a large one in Africa as well. And I think these are the projects that are very ripe for an addition of a mining type of operation in sync with these types of infrastructure projects. So as a result, I really think that the movement of green energy will also uplift the organizational capacities, if you will, of the governments and their regulatory bodies to try to implement Bitcoin and Bitcoin mining in particular into these projects. I think that's really good for the space. I believe that, again, that does increase the security of the network itself. As far as centralization goes, there could be arguments, I think, both ways as to whether or not this is a positive thing. But at the end of the day, I really feel that we've lived through the last 10 years of different dominations by different geographies of Bitcoin mining. In the past, I believe it was Asia. Now there's a certain shift that is actually coming more towards North America and the European Union in certain areas where mining electricity costs are very, very low at near zero. So I think that the trend is definitely shifting from one to the next, and this shift is inevitable. It's always going to bounce back. But what is really cool to me is that this is actually now going to become an incentive model to build these types of infrastructure projects that have a higher return on investment than they've ever seen before. And then on top of that, you layer in the derivatives markets, and you can get a completely brand new economic engine that can be formed. So I really think that this is something that's a very exciting future for Bitcoin, as well as the Bitcoin miners that are going to be active in this space. And it's just a huge, vast amount of opportunity, I think, for anybody who's interested in this particular aspect of Bitcoin. If you want to learn a little bit more about mining, I think there's a lot of good resources out there, but it's really easy to dive into the rabbit hole. So we'll keep that out of this discussion for the time being. But I think that as time goes forward, people are going to start to understand more and more, because of the halving, because of governments, projects, because of infrastructure spending, that Bitcoin has this intrinsic value on so many more levels than what's just worth in terms of a dollar, right? And what it's worth in terms of being able to store electrical capacity, in terms of what it's worth in being able to be a hard currency in a deflationary economic structure, and for what it's worth in terms of being able to preserve real, true wealth, regardless of what instrument you're actually operating in and transacting in the real world. So stay tuned to see more exciting things to come in the Bitcoin space, and as well as for us. check us out at moontower.co. And my name is Nick, signing off.
My name is Yuri, and thanks for tuning in.